Hello friends, welcome to Money Village channel. Today we will see where the Indian markets are headed over the next 1 week with both fundamental as well as technical analysis. We will start with the fundamental analysis. So on the positives that we have, in the last week, US shared the consumer price index for the month of October and the expectation was 7.9 percentage, whereas the CPI was down to 7.7 percentage. So this will be a positive with respect to the resulting Fed actions in the next subsequent months, wherein the expectation for higher interest rate hike has become less now. So the US is expected to increase by 0.5 percentage in December instead of 0.75 percentage with respect to the interest rate. India VIX is down to 14.4. This will be a big positive for Indian markets in the short term. Dollar index is down to 106.42, which is also a boost for emerging markets including India. Indian forex reserves is relatively stable in the past 1 week, though it is down by $1 billion. It is not down significantly. The current reserves declared by Reserve Bank of India on Friday is $529.99 billion versus $531 billion in the previous week. Rupee has appreciated in the past week by more than 1.5 rupees, and this suggests that there is a positive bias for India with respect to investments from overseas. FIIs are still net buyers in the past 1 week, which is a positive. Now we will move to the negatives. Russia-Ukraine war is still going on. There is no end date that we can see in the near future. Brent crude price is still above $95 per barrel. US election uncertainty is an overhang for the markets. Then we have the RBI meet in the first week of December, wherein there is an expectation of up to 50 basis points hike in the interest rates. So this will impact the borrowers for home loans and other personal loans. Then the US Fed is expected to meet again in the month of December to have at least a 50 basis point interest rate hike. Though these two events are somewhere after 2 or 3 weeks, the markets will tend to factor in these in the near term. And Indian market has become relatively expensive in the past 1 month, and we need to exercise caution at higher levels, and it will be safer to book profits in the short term. We will see how the Indian ADRs have performed on Friday night. So HDFC Bank has closed 2.62% up. ICICI Bank is down by 2.53%. So this would mean that the BankNifty is more or less going to open flat or with mild bullish bias on Monday. Infosys is up, Wipro is up, Tata Motors is also up. So the IT index is likely to open in a positive on Monday. We will move on to technical analysis, wherein we will analyze where the Nifty, BankNifty and FinNifty indexes are headed. First, we will see where Nifty is headed. Nifty is trading in a rising channel since 12th of October, and as long as Nifty is trading within this uptrend channel, it is safe to go or be long in Nifty, and Nifty has immediate supports at 18,260 odd levels. So as long as Nifty trades within this channel on Monday, we can safely go long on Nifty, and Nifty is likely to hit all-time highs in the near future as long as Nifty trades within this rising channel. We will move to Bank Nifty. Bank Nifty is also trading in a rising channel since 30th of September, and the support for Bank Nifty in the short term will be as per this channel trend line, wherein we can see around 41,600 levels. So it will be good to have a stop loss below 41,600, and since Bank Nifty is on a rising channel, it is expected to move up in the short term. We will also see FinNifty. FinNifty though has less volumes. This index is also trading in a rising wedge, and the immediate support for FinNifty is somewhere around 18,700 levels as per the rising wedge, and the resistance is somewhere around 19,149, 19,150 levels in the short term for Monday. And we expect FinNifty to hold 18,700 levels till Tuesday expiry. We will also see US dollar index. Dollar index has broken down from long-term support levels, and this is something which is really negative for dollar index, and this will be beneficial for the emerging markets. And as per the chart that we can see a triple top formation in the dollar index. So as per the triple top formation, dollar index is likely to go below to 105 levels, which is based on the parallel line over here. If we draw a parallel line here, we expect dollar index to go to 105 levels in the short term, which is a benefit for the emerging markets. We will also see crude oil futures. Brent is trading above $95, and based on the long-term trend line which we have drawn since March 2022, this trend line is likely to be broken, and like if crude goes up, that will be a significantly negative factor for India. We will also see USD INR. USD is likely to take support at 80.2 levels, and this would be a long-term support for USD INR pair, and rupee has appreciated significantly in the last 1 week, and if there are equity markets perform good in India in the next 1 week, then Indian rupee is likely to appreciate further. The verdict for the next 1 week will be to stay long in the market, and if you're already in profits, one can consider to book partial profits at higher levels, and this is not the time to go short, and one can be either long or book partial profits in the current market scenario. If you like this video, and if this video is of information to you, please do share, like and subscribe. Thank you.